Hello all, a very warm welcome to our channel. So this is part 2 of weekly income tax update. In this video we will discuss the Supreme Court decisions, the recent decisions of the High Court and the Tribunal, some selected decisions and the recent circular notification. So let's start with the Supreme Court decision. So during this week, a very landmark decision was delivered by the Supreme Court in the case of Vikram Sujit Bhai. I think it was delivered on 6th April, very recently, wherein the Supreme Court held that the amendment which was brought in the section 153C shall have a retrospective effect. It means it shall apply to the searches conducted even before the date of the amendment. So we will discuss in detail what is the 153C, what is the amendment, what was the effect before the Supreme Court, and what does the Supreme Court held and why it held and why I said that it's a landmark decision. Okay, so let's discuss first step by step. So when a search happen, say search happen in the premises of Mr. A. So he is a person in whose premises the search conducted. In the premises of Mr. A, assume some documents or some valuable article is found of Mr. B. So there is some article which or some document which is found during the search in the premises of Mr. A, but that document belongs to Mr. B. So 153C says, then in that case, the tax officer Mr. B can open the case of Mr. B as well, as if the search has been conducted in the premises of Mr. B. So again repeating, if a search is conducted in the premises of Mr. A and some document or some valuable article is found which belongs to Mr. B, then the case of Mr. B can also be opened under section 153C as if the search has been conducted in the premises of Mr. B. This is the 153C in a nutshell, in a very briefly manner. Okay. So what's the controversy? 153C says before the amendment it used to say that if some document or some valuable article belonging to the other person, in our example the other person Mr. B, belonging to other person is found during the course of the search in the premises of Mr. A. So the 153 use the word belong. It says if some document or article belonging to Mr. B has been found in the premises of Mr. A. Okay, then in that case the assessment of Mr. B can also be opened. The Delhi High Court in the case of PepsiCo gave a very restrictive and a narrow meaning to this word belong. They say that 153C can be applicable only in case the document which is found in the premises of Mr. A actually belong to Mr. B. So this that if the document has a reference to Mr. B or pertain to Mr. B, then 153C cannot be invoked. 153C can be invoked only in case where the document actually belong to Mr. B. So if the document is found in the premises of Mr. A which actually belong to Mr. A, but it has reference to a transaction undertaken between Mr. A and Mr. B, then in that case, as per Delhi High Court, the case of Mr. B cannot be opened under section 153C because the document does not belong to Mr. B. It has a reference to the name of Mr. B, but for this 153C, the document must belong to the other person, to Mr. B in our example. Okay. So the High Court again said that the word belong has a narrower meaning than the word pertain to or relates to. So the parliament made an amendment in 2015. What they did is they substitute this word belong with the word pertain and relate to. With the word pertain to or relates. Now, what the substitutive provision, how it reads? The substitutive provision reads as if during the course of search in the premises of Mr. A, any money, bullion, jewelry or the valuable article belonging to or books of account or other document pertaining to or any information that containing therein relates to Mr. B, then the case of Mr. B can also be opened. So with the books and the documents, they have used the word pertaining to, and then also said that any information in such books of document which relates to Mr. B, then the case of Mr. B can be opened. So amendment was brought in by Finance Act 2015 with effect from 1st June 2015. So clearly the amendment was brought in to overrule the Delhi High Court decision. So now, in this case, the case before Supreme Court, what was the fact? A search was conducted in the premises of Safal Group in year 2013. Therein, the income tax officer found a hard disk, and in the hard disk there was an Excel file which has a reference to the assessee, Vikram Sujit Bhai, which has reference to transaction with the assessee, Vikram Sujit Bhai. Okay. So the case of the assessee was open under section 153C. But assessee challenged that no document belonging to me was found during the search. The document which was found belonging to the Safal Group, it has a reference to my name. And since the search was conducted before 2015, before the amendment shall not apply to me. I shall be covered by the Delhi High Court decision, and therefore my case cannot be opened under section 153C. So this was the precise argument of the assessee. And this was a controversy, this was the issue for consideration before the Supreme Court, that whether the amendment by 2015 can be applied retrospectively, meaning thereby, can it be applied to the searches conducted before such date, before the date of amendment, that is before 1st June 2015. Supreme Court answered in the favor of revenue against the assessee and held that the amendment to section 153C has a retrospective effect. It shall apply to searches conducted even before such date, before 1 June 2015. To reach to that conclusion, what Supreme Court said? Supreme Court said that while interpreting a provision or an amendment, the duty of the court is to understand the purpose and the object or the intention of the amendment. And once it is found, becomes the core duty of the court to give effect to that purpose or to that intention. The Supreme Court said that the purpose of the amendment was solely to overrule Delhi High Court decision in the case of PepsiCo. And therefore, it's the duty of the Supreme Court to give effect to that intention and to apply this provision even to the searches conducted before the date of amendment. Supreme Court again held that 153C is a machinery provision. And what happens in case of machinery provision, generally an amendment applied retrospectively. In case of substantive provision, generally an amendment applied prospectively. So this is a difference. This is the rule of interpretation. The machinery provision, amendment the machinery provision applied retrospectively. Amendment in the substantive provision generally applied prospectively. So Supreme Court said that 153C is a machinery provision, and therefore more so the amendment should apply retrospectively. It also said that the amendment is brought in by the substitution. The word belong or belongs to has been substituted with the word pertains to or relates to. And Supreme Court said when the amendment brought in as a substitution, then in that case it is assumed that the substituted words, the new words, were there in the statute since the provision, since the old words. So it is presumed that since the provision was there, it used the new words only. And therefore, one more reason that this amendment should apply retrospectively. The assessee argued that though this is a machinery provision, but this affects the substantive right of the assessees. What was the argument of the assessee is that because of this amendment, there is a new set of assessees which has brought in the gamut of 153C, which were earlier not covered, because earlier only those assessees were covered whose documents belonging to the documents of whose were found in the premises of Mr. A, premises of searched person. But now, even the persons in whose case the documents which has reference to those persons will also be covered under 53C, and therefore this whole set of new assessees which will now come under 153C. The argument of the assessee was that the scope of 153C has been expanded. Now there is a whole class of a new assessee which were earlier not covered by 153C, which shall now be covered by 153C. So therefore, though it's a machinery provision, it affects the substantive right of the assessee, and therefore it should apply prospectively. The substantive right of the assessee should not be disturbed from the retrospective effect. But Supreme Court dismissed this argument by saying that 153C is always applicable on the third person, on the person in whose case search has not been happened, on the person whose documents have been found in the premises of some other person. So therefore, this argument is not worthy, is not sustainable, and the Supreme Court said, and therefore 153C, the amendment to 153C shall apply retrospectively. The Supreme Court has referred to some decision on the retrospectivity to understand the how an amendment shall be interpreted, whether retrospective or prospectively. But surprisingly, it has not referred to the reason of constitutional ban in the case of Vatika Township, another income tax reason, and which has elaborately discussed on the principles of interpretation in case of retrospective amendment. So this reason, though, is specific to 153C, but on the question of retrospectivity, it has opened a new debate. Now the tax department will try to rely on this reason in every other case. Recently, the Parliament has made a lot of amendments, which though have been held to be have been made from prospective effect, but the language of those amendments create a doubt whether it should apply retrospectively or not. Say for the amendment in section 43B in case of employee PF, section 14A by 2023 amendment, I think. So now the department will rely on this reason to say all these amendments, though has made prospectively by the Parliament, shall apply retrospectively, should apply retrospectively, and this will create a lot of litigation in future. So this was the first reason of Supreme Court, and very landmark, because now the question of retrospectivity, the applicability of amendment retrospective or prospectively will has been opened. It has been now unsettled. Now there will be a lot of litigation on this point, whether the amendment recently made by the Parliament it applies prospectively or retrospectively. Okay, so this was the reason in the case of Vikram Sujit Bhai. Yeah, another reason by the Supreme Court in the case of Pavilion Projects. What is the facts of this case? It's a company of a private limited company of family members. One brother and two sisters are the shareholders. Okay, the family dispute arose. The dispute goes to the High Court, and the family settlement, out of the court settlement happened. And what the settlement was that each of the shareholder would be paid ₹10 crore. To pay ₹10 crore to each of the shareholder, there was a house, Pavilion House, in the books of the company. That house was sold, and this company, what it did that at the time of filing income tax return, it shows the amount paid to shareholder as cost of improvement. It said that it's an encumbrance, and the amount is paid to remove the encumbrance, and therefore it should be allowed as cost of improvement. And AO also agreed to the contention of the assessee and passed an assessment order. However, subsequently, the order was revised by CIT under section 263. Assessee challenged the revision, and the ITAT held in the favor of assessee and dismissed the revision order by CIT. Matter reached to the High Court. High Court again held in the favor of assessee and confirmed the order of the ITAT. Now, the matter is before the Supreme Court on the appeal of the revenue. However, Supreme Court said that the ITAT and the High Court have done a serious mistake. They revived the order of the CIT and held that the original order passed by the AO is erroneous and prejudicial to the interest of the revenue. So what was the reason of the ITAT and High Court to set aside the order of CIT? It was that 263 used two words. The order should be erroneous, and it should be prejudicial to the interest of the revenue. So even if only if the order is erroneous, in that case 263 cannot be invoked. Both the conditions must be satisfied. The order must be erroneous, and it should be prejudicial to the interest of revenue. The Supreme Court in its earlier decision in the case of Malabar Industry held that every loss of the revenue cannot be held to be prejudicial to the interest of revenue. The word prejudicial to the interest of revenue has to be read along with the word erroneous. So only if the order is erroneous and it results in prejudicial to the interest of revenue, only in that case 263 can be invoked. But in this case, the assessee was relying on some judgment of the Bombay High Court, and therefore ITAT and High Court held that there was two views, and because the AO, in the original assessment order, took one view, which though resulted in the loss of the revenue, but that doesn't make the order erroneous, prejudicial to the interest of revenue, and therefore the revision under section 263 was not right, was not correct. However, Supreme Court said once the order is erroneous, then every loss to the revenue shall be deemed to be prejudicial to the interest of the revenue. There is only one exception to this principle, is that when there are two views possible and the AO take one of the view, and that the view that which the AO took is also plausible view, is also a view which could have been taken. It's not at all a erroneous view. So in this case, the Supreme Court held the view which the AO has taken by allowing the cost of improvement by treating it as a cost incurred to remove encumbrance is erroneous, and it cannot be allowed, and it has resulted in the order passed by AO as erroneous, which has been prejudicial to the interest of revenue, and therefore the revision proceeding or revision order passed by CIT under section 263 is very well valid. So again, a negative decision from the Supreme Court. So this week we have two negative decisions from the Supreme Court. Now another very interesting reason came from the Ahmedabad Tribunal on deduction under section 10AA. So under section 10AA, a deduction is given tax holiday for exporting for the goods or services exported out of India. So in this case, there were some controversies or some issues which were decided in favor of the assessee finally, and in this case, the ITAT held that section 10AA can be allowed even if the claim of such section, claim of the deduction section 10AA, is made at the time of filing revised return and not at the time of filing original return, because under section 10AA there is nothing which says that the deduction shall be allowed only if it is made in the course of original return section 139(1). So there is no time limit given section 10AA by which the deduction is to be claimed. Now by the finance 2023, now there is amendment section 10AA which provides the deduction shall be allowed only if the deduction is claimed in the original return, but that amendment is applicable prospectively, and therefore ITAT said that during this case, this was for assessment year before 24-25. So in this case there was no such amendment, there was no such provision of section 10AA, and therefore 10AA can be allowed even if the return is filed, even if the claim is made in the revised return. Secondly, in this case the assessee had furnished the audit report section in form 56F during the course of assessment proceedings and not with the return of income. And I tell that that's perfectly valid. The intent is to allow the deduction. It's a deduction, beneficial provision and should be interpreted liberally. Okay. And thirdly, in this case, the assessee had converted from proprietorship to the partnership, and therefore the argument of the department was that section 10AA cannot be given because the new business has formed by splitting or reconstruction of the existing business, and therefore in that case 10AA cannot be given. But the ITT said it's not the case of the splitting or reconstruction of the new business. Rather, it's a case of actual transfer of the whole business from proprietorship to the partnership. It's a transfer of whole business. It's not a splitting up of reconstruction of the existing business into two parts. It's a transfer of the whole business by the proprietorship to the partnership, and therefore this provision of splitting up or reconstruction is not applicable in the facts of the case, and 10AA shall be allowed. And one of the arguments before the revenue was that in this case the assessee was not actually exporting the goods himself. What he was doing is that he was selling the goods to a merchant exporter who were exporting the goods. So it says that the department said that it's not the assessee who can claim 10AA because he is not exporting the goods, and it's not the assessee who is bringing the foreign exchange within India. But the ITAT held that the provision is to promote the export, and in this case it's no doubt, it's nobody's case, it's the facts is not in dispute that the merchant exporter has actually exported the goods and has brought in the foreign exchange, and therefore 10AA shall also apply to the deemed export. So on this reason that on this reason the assessee is eligible to section 10AA deduction. So this was the reason I thought it may be helpful to many who are claiming 10AA deduction. It has set up some principle that 10AA can be claimed in the revised return. Of course, there is an amendment from prospective effect. I am talking about the earlier years before the amendment. Even if the audit report is submitted during the course of assessment proceeding, it's perfectly fine. 10AA shall be available. In case of transfer of whole business from A to B, then the B is eligible for 10AA. It will not come under the clause splitting or reconstruction. And 10AA is also applicable. It's also available in case of deemed export. Okay. So this was the decisions which came recently. Now we are moving to circulars and notifications. So they are not much. As you know, there is amendment in the budget which says that the new tax regime in the case of individual, HUF, etc. has now become the default regime. So CBDT has come up with a circular saying that in case the employee doesn't actually opt for the old scheme, old tax regime, the employer shall deduct TDS under the new tax regime. This is one. Secondly, the linking of PAN and Aadhaar has been deferred till 1st July 2023. And thirdly, they have just given the figures of the direct tax collection for the year 22-23. The gross tax collection is from income tax is 19.68 lakh crore and the net tax collection is 16.61 lakh crore. And thereby they have given a dividend of around 3 lakh crore during the year 22-23. So this was all the recent updates regarding income tax. Thank you.